holiday, I think.
Yeah, well, thank you very much. Yeah, my day's been good. I started out by doing some writing. I'm working on a new book, and I also write some articles for the financial publication Forbes. So started my day doing some writing, and all is good.
Okay. I'm going to start by saying thank you so much for making the time. It's an honor to be speaking with you, to be honest. And
Thank you.
I'm glad that, Linda speaks highly of you, and she's the one who made this connection. So it's great to be speaking with you and to be able to get into a glimpse of your mind and, So I'm going to start by reading your bio just briefly, and then we can get right to the questions, if that's okay.
Right.
Okay. Brett Steenbarger is a clinical associate professor of psychiatry and behavioral sciences at SUNY Upstate Medical University in Syracuse, New York. He works as a performance coach for hedge fund portfolio managers and traders, and has written several books on trading psychology, such as The Psychology of Trading, Enhancing Trader Performance, and The Daily Trading Coach. And maybe you'll share with us the other book that you're working on later. He has written several dozen peer-reviewed book chapters and journal articles on the topic of brief approaches to cognitive, behavioral, and emotional change. He's an author on the TraderFeed blog. He covers the psychology of traders and markets, emphasizing recent research and application in psychology and behavioral finance. Welcome to the interview, Brett.
Well, thank you very much. I really appreciate the opportunity to speak with your members. One of the real miracles of the online medium is the opportunity to connect with people literally all over the world. It's very exciting, and I really appreciate it.
Yes, and the African audience will be delighted to, hear from you. So, you've been trading for decades now, and when some of our members wouldn't know, your journey into trading, maybe you can start by telling us, on your trading career, how would you describe your trading style and the markets in which you trade?
Okay, yeah. So primarily, I'm a psychologist. I work with people in financial markets and help them. So I do not trade full time. That's my full time work is as a performance coach, working with traders and working with portfolio managers. I have traded starting in the late 1970s and continue to trade now, but on a part time basis. And I trade stock index futures, primarily the S&P 500. And my style of trading is intraday, so it is short term, partly because of my schedule constraints. And it's a combination of quantitative work, mathematical work, and discretionary pattern recognition.
Okay, so it's you say you trade the S&P 500. So you deal with stocks?
The S&P futures and the S&P ETF, which goes by the symbol SPY.
Okay. So you don't deal with currencies at all?
Not at all.
Okay.
The traders I work with trade currencies, and so I'm familiar with it from that vantage point. But in my own trading, I only trade the stock index futures.
Okay, understood. So since the 1970s, and you've been trading till now, how has your trading evolved since then, if it has, and what interesting developments do you see happening in the modern day markets?
Yeah, so my trading style very much has evolved. I think it's become more consistent, more process-based. It's become more mathematical, combining some mathematics, combining some quantitative work with discretionary pattern recognition. Because I work with many institutions, I understand how they invest and how they trade. And so some of the short-term methods I use take advantage of patterns in the trading that are common among the institutions. And so that's been an evolution. Markets certainly have changed over the years considerably. The individual trader is much less of a component of the overall trading volume. The trading is done much more by institutions, much more systematized. And so that has changed the opportunity set for traders. I think overall has made markets more challenging and more efficient. And that's a real challenge for newer traders.
Okay, and as I was looking into your history and your work, and even reading through your bio, I'm just like reminded of the legends in psychology, like Mark Douglas, and you like your work and your mastery of psychology. Really, it's maybe sort of the thing that we will focus on in this interview. So you can like tell us how psychology has played a huge part even in the people that you coach, and the portfolio managers, and also in your trading as well.
Yes. So it is unusual that I am both a professional psychologist and someone who actively trades in financial markets. And I think that has allowed me to use the psychology to help my trading and to help the trading of the people I work with. My style of following markets is very similar to my style of following people when I work with them as a psychologist. In other words, I listen to markets just like I listen to people, and I look for patterns in markets just like I look for the patterns in people's lives when they're trying to make changes. And it's by being receptive and listening and recognizing patterns in markets that I gain an appreciation for market psychology, and I can understand when the bulls are more dominant, when the bears are taking the lead, and I can adjust my trading accordingly.
Okay, so you're able to read the markets as you would read someone's mind. Is that the comparison you
Yes.
make?
Yes. The markets have moods and markets have behavioral tendencies just like people do. And if you're used to, if you're familiar with the behavioral patterns of people, you can see patterns setting up in markets.
And I also guess it's also because the markets represent the thoughts and people's attitudes and fears, and whatever it is that they do is all reflected in the market. So if you're able to read that, then I think the interpretation also, you get it right. Is that the case?
Yes. You can definitely see when volume is coming into a market, when markets are gaining and losing participation. And that gives you important clues as to the sentiment of participants. There's a framework called market profile that's very helpful in that regard.
Okay, and from my own perspective, I like to compare trading to a sports, like a professional skill-based sport. So let's say if it's athletics or basketball, because it's a skill-based profession. So based on your interaction with the people that you have coached over the years, how do you shape their mindsets to, come to the point where they realize that the only competition they have in the markets is against their performance? And like, what metrics do you emphasize on for people to consider when they want to have longevity in trading?
Okay, those are good questions, and there are a few questions there. There are certain ways in which trading, like sport, is not like sports. So let's start with how trading is like sports. It's similar, as you point out, in that it is a skill-based activity. And it requires not only skills, but it requires talents. Talents are the abilities we are born with. Skills are the abilities that we develop as a result of practice. And just like in a sport, we can't succeed if we don't have both talents and skills. So, for instance, if I don't have certain foot speed, if I don't have certain jumping ability, then I'm not going to succeed professionally in a sport, even though I might try to build my skills. In sports, we recognize that it commonly takes many years of development to reach a point where someone can be a professional. So it's common that someone would start as a young person in a youth league and then perhaps play their sport in school and then play it at various professional levels before they could ever make a living from their sport, before they could ever be a star. And that is something that traders, particularly individual traders, don't take into account. They hope to open an account, read a book or two, listen to a webinar or two, and then start trading for a living. That's insane. No one would try to make a living from sports after reading a few books on football and practicing for a few weeks. And yet people do that with trading all the time. And that's a main reason why very few people achieve long-term success at trading. If we have a framework for building our skills and making the best use of our talents, and we start by trading in simulation, practice trading, and make our mistakes and learn from our mistakes, just like people practice football or basketball, then we can develop the skills and we can succeed in financial markets. But it takes a while to do that. It doesn't take just a week or two. It doesn't take a month or two. It commonly takes more than a year of continual study and practice. Now, how markets are different from sports. In sports, the rules of the game stay constant. So if I'm playing football, the field is a certain length. The game lasts a certain amount of time. That doesn't change from week to week and month to month and year to year. The rules of the game stay the same. But in markets, the underlying rules and patterns of markets change continuously. And so in one market, in one period of time, the market might be trending, another period of time, it might be range bound. One time it's volatile, another time it's less volatile. Sometimes it's correlated to other markets, sometimes it's less correlated. So the markets are continually changing. It would be like playing a sport where the rules are different every single week. That takes a lot of learning and relearning to adapt to changing conditions. Many traders fail because they try to use one approach in all markets. And it doesn't work because markets are always changing.
Okay, that's well explained. Maybe like a follow-up question on that. If someone really wants to know whether they are best suited for trading, of course, the skill takes some time to learn.
Yes.
And so that the talent aspect of it, like what would one say, like what would you look at in someone who wants to trade and identify X amount or X talent in them? Is it that they're good in math? Is it that they're good in memory? Like what kind of talent would you pinpoint and say this would be best suited if you want to trade?
Yeah, very, very good question. And the answer is that there are many types of trading. And so there are different talents that go into the different types of trading. So if someone is a day trader and they're trading on a very short time frame, then the talents involved include pattern recognition, fast information processing, so you have to be very quick mentally, the ability to act quickly on information, the ability to stay focused and make decisions one after another throughout the day. Those are all talents that are unique to short-term trading. There are other people in markets who aren't short-term traders. They're more like investors, and they hold positions for multiple days or maybe even multiple weeks or months. And the talent that's most important for them is analytical skill, because they are trying to analyze and identify longer term opportunities in a particular asset. And that means processing different information and coming up with a view on the market that's going to be unique, that's going to be different from what other people are trading, and that puts together the different pieces of information that they're collecting. So that's very much a research-based process, an analytical process, but it's also a process of synthesizing information, putting together different things, which is a creative process. So we look for people who are longer-term investors to be able to see unique opportunities, and that takes a degree of creativity of thought.
Okay, understood. So over the years, Brett, how have you managed to evaluate your performance? You said that your trading is a mix of discretionary and quantitative. So do you statistically, do you statistically track your trading performance, and has it helped you in any way to improve to nurture your trading skill?
Yes. So I'm a big believer in tracking our trading performance and using that to make improvements in our trading. And so there are a number of statistics that I follow, both with my own trading, but also with the trading of the people I work with. Those statistics obviously include profit and loss, let's say on a monthly basis, but also include the number of winning trades during the month, the number of losing trades during the month, the average size of the winning trades, the average size of the losing trades, the profitability or loss in different types of trades. So for instance, one statistic that really helped me with my trading was tracking my profitability as a function of time of day. It turned out that during the busy morning hours in New York, my profitability was much higher than during midday when the volume is lower. And that's because there's more likely to be follow through and momentum during the busier market periods. And so I am aware of which times of day are usually best for me, and I can do my larger trading during those hours. Finding patterns in your trading really help you make improvements.
Okay, and do you like journalize your daily trades if you trade? You're an intraday trader, so do you do that? Do you still journalize your trades today?
I make notes. I don't keep a formal journal, but I make notes, and those notes include, they function like a journal. They include the mistakes I made, the things I did well, and changes I want to make in my next days of trading. The traders I work with, often the newer traders, the ones who are developing, they do keep regular journals, and in fact will share the journals with their mentors, with their coaches, and with each other so that they can get feedback on their trading. And that very much helps them correct their mistakes and identify what they're doing best. There's a proprietary trading firm where I work called SMB in New York City, where the journaling and mentoring and sharing of journals is an everyday process. And it really helps people become successful.
Yeah, because it puts you like in a trading community, and then so you have like a support system. Because trading can be lonely, to be honest. It's just you and the screen and the markets.
That's right. That's right. And people can help each other, support each other. You're absolutely right. There are many advantages of being part of a trading community. Plus, you just learn from each other. You learn from other people's mistakes and you learn from their successes. So I am a big fan of trading communities, whether they're online or whether they are trading firms where you're actually sitting together on a trading floor.
So can you give us an example of one or maybe two memorable trades in your career since the 70s? A good one or a bad one, and the lessons that you took from it that you still remember to date?
Yeah, I'll mention one that I've written about. It certainly had a profound effect on me. I was trading in the 80s, and I was a student at that time. I was a graduate student and doing quite well, actually, with my trading, and was short the market. And it was in August of 1982 that we began a major bull market in the US. And the market went against me very hard. I lost a good amount of money very quickly. I decided to hold on and not just get out. And the market made a second move against me later on in that year. And so I lost a good amount of the money that I had made in previous months. Now, there were two pieces of learning, I would say three pieces of learning that came out of that. One was I had to learn techniques to be more aware of short-term price action and understand what was moving markets on a short time frame, because much of my trading was longer term then. So it really helped me begin reading market indicators and understanding buying pressure and selling pressure and finding different ways of measuring that. And to this day, that's a cornerstone of my trading. So that was the first thing. The second thing is obviously it taught me a lot about risk management and the importance of keeping losses contained. And the pain of that loss stayed with me and was a great learning experience as far as actively managing risk. But the third thing it did for me was probably the most important, because after I lost the money, I was really depressed. I was really unhappy. And I had expected that I would make a living both from my trading and from my work as a psychologist. And this loss really put part of that into question. And it was a rather dark time for me. It was very shaken. And ultimately, it got me to step back and reevaluate my life, ask myself what's really important in life, and focus on the most important things, which end up being my relationships and my psychologist. And not too long after that, about a year after that, that I met the person who would become my wife. We're now married for 36 years. And I refocused. And that was a very positive thing in the end, and taught me that I can't let my happiness rise and fall with markets. More to life than trading.
Wow, that is just so, like the lessons that you took from that loss translated even into your personal life, and how you thought about your happiness and your success. So I guess
No question about it. Yeah, never again would I allow results in markets to dictate my happiness. Yeah.
Okay, because too often we traders, like if you make one big huge loss that erodes like your entire works profits or savings, you tend to ask yourself whether you're really meant to be a trader, and you question a lot whether the hours that you've put in really matter. And at that point where you were asking yourself those questions, did the psychology bit of your background help you, to come back to yourself and to go back at it, and not just to give up trading?
As far as giving up trading, I certainly did give up the way I was trading, and that was a good thing. If someone loses most of their money, in fact, they should give up what they're doing, because no one should take losses that large. It means that they're not risk managing. So there's some things worth giving up. I ended up getting back into trading, but in a very different way. Ultimately, what really changed me, I think, was not just the psychology, but putting my emphasis in other areas of life. And it's mostly about my relationships and finding fulfillment in working with people and in my personal relationships. And so not depending so much on my work in markets to make me happy. In fact, I'll be publishing an article in Forbes today on this very topic of achieving diversification in your life, of having many different areas of your life contribute to your emotional well-being, and not just relying on returns from markets.
All right. And some people still don't understand the difference between investing and trading in the markets. And just last week there was an article done by a local publishing newspaper of how Kenyans have been duped by some investment firm that says they would trade for them and give them, say, 20%, guaranteed 20% return on per month on their capital. And so what would you tell those people who have lost money to dubious fund managers or investment firms concerning trading and investing?
Yeah, it's a great question. There are a lot of dishonest people out there in the trading world, and so it's very important to deal only with very reputable people, very honest people. And by being part of a trading community, by reaching out to others, you can find out who has a good reputation and who doesn't have. If someone promises you something that sounds too good to be true, it's probably too good to be true. And it's helpful to be careful about giving anyone else your money. The important thing in trading is learning the skills, building on your talents, practicing, developing some ideas of what works in markets, understanding supply and demand. And then once you understand those things and once you have succeeded in practice trading, then you start to put some of your money at risk. Or if you if you don't have the capital, then you might join a proprietary trading firm and trade their capital, and you keep a percentage of your profits.
Yeah, but I think what most people do not want to do is to put in the time to learn how to do it for themselves, because they want to give someone else the power to manage their money, because they think that they're busy with something else. But the trading element of how to do things, they don't really get that into their minds.
Right. And many times they're looking to get rich quickly, and that always ends badly. If I were giving my money best, then I would want to make sure that they have a track record of success that has been independently verified. If they can't produce a proven track record of success, I would never give them my money.
Yeah. So
there are many people in the trading world who offer advice and offer courses. Many people who offer advice, who offer courses, who are total frauds. Total frauds. Very common. Very common. There are many people who claim to be trading coaches and trading psychologists. They have no background in psychology and they don't trade professionally. Total frauds.
Yeah.
Mm-hmm.
Yeah. And do you have your own trading philosophy, a belief that you have about the markets and how the markets operate? And if so, does it shape how you trade?
Yes, the general framework that I use is to break any market down into two different components. One is a directional component, which we could call trending. So there's some, over a given time period, there's some directional tendency of a market, and we can identify that with a regression analysis or any such technique. And then the second element would be cyclical elements. So there are cycles going up and down that overlay the directional tendency of the market. So imagine cycles on top of a trend. And so we have trending markets or directional markets that move up and down on shorter time periods based on dominant cycles. And so in my work, I try to use the cycles for timing entries and exits while trading with the trend.
Okay, so primarily what guides you is the trend. It has to start from there.
It starts with if there is a definite trend, I want to go with that trend. And in general, I want to buy oversold points that occur at higher price lows, and I want to sell lower price bounces. In other words, bounces in the market that are at lower price highs to take advantage of those shorter term cycles.
Okay. Okay. So we're almost winding up. What can you say about a trader finding their own trading style, even when they have outside help from the trading community, coaches and mentors, and avoiding the comparison that comes with different strategies and the trading models and all the techniques that exist today? What can you tell traders?
Yes, yes, yeah, good question. Yeah, so the advice I give developing traders is to study your winning trades. Study what you do well. Study what makes sense to you, because ultimately it's building that out that will create your success. And so I encourage people to keep journals, to learn from their trading mistakes, but also learn from their trading successes. See what works for them and then build that into their trading style. Many traders just focus on the mistakes they make, they focus on losses they take, and they never really identify their strengths. They never identify what they do well, and so they don't make the most use of it.
Okay, and is that also like having a different mindset towards how you trade? Because the mind, I know like the mind is a powerful tool, and we create and we bring to life things that happen in our existence. And so when you just focus on the negative elements to your trading, then you end up being a loser. Is that correlated in any way?
Yeah, I think that's a very good point, Sylvia. That if we only focus on losing and the losses we've had, the mistakes we've made, we never build up our confidence, right? So I think you make a good point that in learning from in identifying our successes and learning from our successes, we also can develop an authentic confidence in what we do. But the one piece of advice that I typically give traders is that you should always have something in your life more important to you than markets. Because if you have things in life that are more important to you than trading, then sometimes you'll make money, sometimes you'll lose money, but you'll always have a happy and fulfilling life.
Okay. That would be like the best parting shot towards the interview. And so you mentioned that you're working on a book. I don't know if it's too early to say what you're working on, but maybe you can tell us where people can go to find your previous publications, books, and
Yes,
yeah,
yes. So
your work based.
my last book is called Trading Psychology 2.0, and all the books are available on Amazon. So if you Google Amazon and my name, Brett Steenbarger, you'll be able to see all the books I've written. There are 4 of them on trading and psychology. And the 5th one is going to be on trading and spirituality. So that's a new topic, not something that many people have talked about, and developing our spiritual lives and how that can help us as successful traders.
That really sounds like a book I want to grab. I've never
Okay,
ever had anyone write on spirituality and relate that to trading. That would be interesting to read.
yes, yes. Well, I'm about halfway through the book, and it'll be written this summer.
Okay. It's really nice. It was nice speaking to you. I'm sure that there's some lessons in here that people will take and apply to their trading. And yeah, I look forward to speaking with you in the future if you find the time. So
Great. I
thank you.
appreciate that. Yeah, I appreciate that. People listening, go to my blog. It's called TraderFeed. So the address is TraderFeed, TraderFeed, at blogspot.com. They go to that address. If they Google that address, Google TraderFeed, and then Google any topic in trading psychology that they're interested in. So you could put in Google TraderFeed and discipline or TraderFeed and risk. Up will come a bunch of articles that I've written over the years. And so it's a great way to learn about specific topics in trading psychology.
Okay, I'll put a link to the show notes on this interview to that your blog site. Yeah.
Very good. Thanks.
Okay. Cheers. Thank you. Have a good day.
Okay. Best of luck. Okay. Thank you.
Bye.
Bye-bye.